Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, January 7th, 2020. What I'd like to do in this video is do a quick overview on the broad markets, and then followed by really the major asset classes. We're going to cover Treasury Bonds, gold, precious metals, the US dollar, Bitcoin. I consider that, I categorize it on the site. When you go into the top menu and you hover over market analysis, you can sort it by all market analysis, all asset classes, equity market analysis, which is obviously anything to do with the stock market, general market analysis. Gold and commodities I have as a separate category. Forex, which is currencies, and then fixed income. Those are your major asset classes. Now I lump Bitcoin into the Forex category because Bitcoin, Ether, these Ripple, they're quasi currencies, if you will. So I think that's probably the closest fit, if you will, to anything other than being their own separate asset class. So either way, we're going to cover that, hit on that. Oil, natural gas, the US dollar, and I'll hit on coffee. I do, if I can't get through all these in this video without it going over, 30 minutes, then I'll cut it short and just follow up with additional charts or another video. Again, if you're new to the site, you may not have heard this before, and if you have been here a while, you probably know I'm a big proponent of asset allocation. It's not just me. And you talk to, money managers in my former life. That's what I was, a financial advisor, stockbroker. Asset allocation is the key to investing in your portfolio. So the old "don't put all your eggs in one basket" doesn't mean, okay, don't just put it all into Apple. Also buy Microsoft, Google, Facebook, and Intel. You're not diversified there. You have diversification among different positions, but they're all concentrated. They're all stocks, number one, which is one asset class, and they're also within one sector. So proper diversification, especially for long-term accounts, 401ks, entails spreading money amongst bonds, commodities, precious metals, equities, and where you're at at the time depends on a lot of things. That's beyond the scope of this video here. The more aggressive you are, you'll have more stocks, more conservative, more bonds, things like that. All right, let's dive into the charts and start out here with the markets. Just a very brief overview, since there's not much to report since last night's update. Look, we're up 0.10%, so we're effectively flat on QQQ. What I would point out here, as we all know, this trend is extremely resilient, and all trends come to an end at some point. Right now, there's really we had some sell signals triggered last week, which I think are still in play. At least I'm treating them that way. We're not really going down, but we're not going up. So I just want to say this, as I mentioned in the video last night, when you look at SPY, which we're doing right here. Actually, we can go to a daily chart, zoom in like this real tight, and I showed you that we're in this trading range here now for since mid-December, which ranges, if you put this box right here, cut off the top of that candle, that includes all these other candles since December 16th, I believe it was, if I can get it back to right there, and that's a 1.5% trading range. So where I'm going with this, what that does on the daily chart, you might say, well, it's bullish. The market refuses to go down. Absolutely. That's the case until and unless it does. But what it does to the momentum indicators, they turn down because although we're not dropping, we're not going up either. And, momentum indicators, when you have upward momentum, let's say you throw a ball into the air. The ball's going up until it starts to flatten out, and then it starts to come down. And so what happens when the momentum was upwards, as it has been leading into this sideways consolidation, a very tight range for the last 3 weeks now, these momentum indicators like the PPO and the RSI, you can see they turn down. They're moving lower. And so what that does is, number one, it keeps this negative divergence intact for now. That's not the end of the world. It doesn't mean that the market must go down. It just means that it's still there intact, and it also has turned down the indicators and given us a bearish crossover on the daily PPO. So when I go here, I pointed these out recently. I like to look at these, what I call hills, on the histogram. This is the PPO histogram. If you don't have a PPO on your chart, put up a MACD and then the MACD histogram. It'll look almost identical. They're very close cousins, these two indicators, the PPO and the MACD. And they help define bullish trends and bearish trends. And what the histogram histogram shows you when the lines make a bullish or bearish crossover. In other words, here's your PPO line in orange, the signal line or the 90 MA is in white. So when the PPO line crosses down below the signal line, that's a bearish crossover, and it tends to foreshadow bearish trends. And likewise, when you make a bullish crossover, which is visually represented here, you had a little whipsaw and there was your crossover, you had a bullish trend, and you can see it right there. So with that being said, we did have what proved to be a whipsaw signal. I highlighted these back at the end of December. We had bearish crossovers, but it really didn't play out for much of really any correction. So that was what I would so far call a whipsaw signal. However, what I'm noting is, and you can see it on the histogram as well, I know I'm making a mess of this chart, but just like I had these divergence lines drawn on the PPO itself, you have the same divergence. You can see each of these hills. In other words, the rally is losing momentum. The vigor of the rally is certainly slowing down at this point. Yes, you have a market in an unmistakable uptrend, and all pullbacks so far have been shallow, at least in recent months here since October. That was about the biggest one that we had, and we corrected sideways. But again, you can see that the momentum is waning so far with lower highs on these histogram hills right there. And most importantly, we do have another recent cross. So sometimes you get a little whipsaw before the actual signal, just like I'll show you one right here. You had a little whipsaw where the lines crossed, then went back down, so that was a false signal there, but then we crossed back over bullish. And you can sort of visualize, usually it's the slope of these hills. You can almost see the crossovers coming before they actually happen. And again, that's what I'm looking at here. So keep that in mind, and it's something to watch. Again, it's not just because we crossed red there, it's not a hard sell signal. I put a higher weighting into what happens on the price. These are just trend indicators down below, so we need to see prices break down. And to that, if you look at that trading range I just showed you here, if we box it in, you can play around with where the bottom of it is, but pretty much a break below that range as well as a break above should determine the next near-term trend. A break above would be bullish. We had a little whipsaw signal there so far, and remember, that's holiday. This is all a lot of holiday trading in here, and as I told you guys, I don't put too much stock into what happens during holiday weeks. And now that kind of we're the first trading week of the year is out of the way, we can kind of get back to normal here. And so this would most likely, a break to the downside would most likely determine the next near-term trend, whereas a solid break to the upside could cross us back over on the PPO, maybe even burn through these divergences. We could get another leg higher here. All right, I didn't want to spend too much time there again, because I will do an update today if there's anything significant. There's just not a lot for me to report here on this 60-minute chart, other than the levels I'm still watching, 211.42 on QQQ, to trigger the next sell signal, as well as a break below 319.48 on SPY. Of course, there's that boxed in range. I should say actually the first sell signal will really come on a break of 320.31 on SPY. Okay, now moving on. These are all somewhat interrelated asset classes, especially TLT in the stock market. TLT is a long-term bond, the 20 to 30-year Treasury bonds and government bonds. And you can see we're at a sort of an interesting technical juncture. I don't have very strong opinion on the near-term direction, but I'll give you, my thoughts here. There's a downtrend line to watch that would be bullish if taken out with conviction. That could open the door up to a move. I should add a level right here. Let me do that right now. I do see resistance right about 140.70 or so. That would be the first resistance level. Next 143.63, and then finally maybe a move up here at about 145.90. Again, we're sort of at the apex of this triangle here. We broke down below it, and we're back testing from below. So you can see we're back testing really the uptrend line from below, as well as this downtrend line. Just from the look of this chart and the posture of the indicators, I would say quite possible leg down like that. This would most likely coincide with a rally in the stock market, additional upside, because Treasury bonds, the prices move inversely or opposite to interest rates. So if you saw TLT drop like this, it would mean rates are going up, and rates would most likely go up if the stock market rallies, and vice versa. So there it is. Like I said, I don't have a strong opinion. Indicators are kind of flattening out here. The trend is bearish because the PPO, that signal line, I use a white line, the 90 MA, when it's below the zero line, it crossed right here, and it's told me since then that trend indicator has been bearish, just like it crossed bullish here, and this entire time without fail. I talk about this one often, how well it tends to work as support when once you break above the zero line, that dotted line. It is support on back tests, as it was on each of those arrows, and it told you we were in a bullish trend, and that trend changed when at least this one trend indicator changed back here when we had the bearish crossover, and it remains bearish right now. So again, just looking at this chart, I'd have to say, if I had to be one or the other, long or short, I'd be short Treasury bonds, but I really don't have a position right now. Don't know, do I care to. I just want to kind of do an all-inclusive analysis for those of you with funds and, let's say, Treasury bonds or other bond funds in your 401k, or if you're trading TLT. And then on that too, I'm going to cover CB, if I can find it down below. I have it right here. All right, this is the 30-year Treasury bond futures contract right here. And you can see probably the most important level here, you have a bullish falling wedge pattern, which it just broke out of recently. And so we've seen a couple things. We've seen risk-off assets rallying up until just very recently, but you had a impulsive breakout there, back test, perfect back test, and then a leg up right to that 158.199 target slash resistance level I had. So far a rejection there. Now it's a little long for a bull flag, but it takes the same net effect. We may be flagging if we can break out soon. You want to see an impulsive break to the upside of that flaggish looking pattern, and then of course you need to break above the 159.200 level right there, and that would open the door for another leg up. So watch this one. I recommend to keep an eye on this if you're trading TLT. Again, you want to look at the futures because that's really what a lot of traders are following. Other than that, if we don't break out soon, you can see support here at 157.055. That was my first target when that wedge broke out, and that was already hit and taken out. Resistance, once taken out, becomes support. So if you're looking to trade treasuries, you can certainly go long on a pullback to 157.055 with a stop somewhat below it. And would I short it there? I don't think so, because you still have some pretty good support. If it broke that level, I mean, you still have these recent lows right here. That's really where I think it would open the door for a lot more downside if and when treasuries broke below that level. All right, so that's an update on the long bond. Won't go into the 10-year now, or the video will go too far. Let's see. Let's look at gold real quick. Gold, this is a 60-minute chart right here. These are the levels I've highlighted in recent weeks or months here. You had a downtrend line which was taken out right here, back tested. This is a 60-minute chart of the futures, and gold just exploded. Really, more importantly, is to take a look at the daily chart or the weekly chart even of gold. And the key levels I was watching recently was this consolidation range, a symmetrical triangle pattern. Been sharing my thoughts for months now that I believe that gold was most likely in just a simple consolidation within a bull market, a healthy, natural consolidation. We became overbought. We had negative divergences. Nothing goes up forever, and so far that has proved to have been the case. And on a scale 1 to 10, I'm going to give that darn close to a 10. As I mentioned before, it would be a buy signal breakout, and you'd want to see an impulsive run up. And I said, if you did, you still have to take out that previous high, and we took it out, but by a relatively small margin. This could be what I call a momentum fueled overshoot. That's when you have a lot of momentum or velocity heading up to a resistance level. You tend to overshoot it and then come back on it and either consolidate or even have a reaction there. But as of now, like I said, the impulsive buying nice volume, trend indicators back bullish, and again, it meshes with the long-term scenario I've been talking about for a long time. I just jumped to a weekly chart here. There's that consolidation, and this looks like we've started the next leg up in the bull market. Constructive looking indicators here on the weekly chart. My long-term, initial bull market target still remains 173.87 for GLD. Like I said, a little more upside. And on that, I'm going to talk about the dollar. I've been bearish the dollar for a while, looking at this, bearish rising wedge pattern on UUP. This is the US dollar ETF, or ETN, technically speaking, exchange traded note. But same, almost the same thing as an ETF, just a few accounting differences. All right, so you had the little wedge there, the primary trend line breakdown back test, and we've been moving lower since. So we got the breakdown, and that was a sell signal in the dollar. It failed at that previous high there, and again, this to me looked like a longer term sell signal in the dollar. And so what I'm looking at now, and this of course would affect gold. This to me, after we broke down here, you can see we had the primary trend line right here, goes down to the left, and then I had a smaller, you can probably just make it out there in the video, smaller minor trend line there. We broke and back tested. From the point of the back test right here, you had a very impulsive leg down. You had a big gap down in UUP and a move down here, and this to me appears to be a bear flag consolidation pattern. If so, you want to see a downside break. The more impulsive, the better it is, the higher chance it'll stick. And you still have, because we hit my 25.89 target / support level, and that's where we reverse. So you need to break that as well. If that breaks, if you can break down through the flag and 25.89 impulsively, well, the measured target for a bull flag, you take the distance of the flagpole and you add that to top of the flag, and that would probably bring you down here, even though my target's I have a 25.58 support level target there, and then 25.21. I think it'd probably bring us down here to that 25.21, at the very least my 25.58 target. How does that matter? Where does it matter? Again, gold and the dollar are inversely correlated. Should that happen to play out, and again, it's just something to watch for. It's only a potential setup. If should that play out like that or that, then that would most likely give gold that extra boost and clearly, put that previous reaction high from a few months back into the rearview mirror on gold, and further increase the odds that gold started, the next leg up. Okay, next let's talk Bitcoin. I've been posting quite a bit on that lately here, and I just want to mention a reminder to anybody in the site. If you're interested in any particular trade, any particular security sector, anything I'm covering, I recommend to visit the site often. You click on the home page. You can click home. Once you're logged in, you click home, or you can click on the logo here of the site. That'll bring you to the home page when you're logged in. This is what you see, and you can see down here the number of comments below, and so you can either click on the post title or that comment link, bring you down to the comments. And I wanted to say that I will often follow up. Members will post questions, or I may follow up with an additional analysis, charts, or anything else on related to whatever was covered in the post above. So in this case, I had a question from a member of the site, and then I followed up, with my reply there, as far as scaling in. You can read the question, I'll let you do that. But in that, I also mentioned, for example, that member wanted to, where to strategically add to a position in overstock. And so, as I said here, this morning, I had quite a few charts I screenshotted, and in that post, you've probably already seen it. I put up Riot, MoneyGram, and Overstock, and GBTC and Bitcoin futures on the daily chart. But what I didn't put up, I had screenshotted the 60-minute chart here. Looks like I put the wrong chart there, guys, in that follow-up post. I got to fix that. Was Beyond Meat. That was the other one. I put up a chart here. I can find it for you since I obviously uploaded the wrong chart there, and I'm just catching that now. Let me pause the video and find that chart for you. Okay, there it is. I had taken this screenshot. Here, I'll move it up here. This morning, you can see down in the lower left-hand corner where it's time stamped at 8:30, and BR, Bitcoin futures, had rallied into that. These are, I believe, the same levels I had back in December, although I last updated this. I had resistance here at just above 8,000. You can see the reactions to the left, why that level comes into play. Quite a few reactions. And so we had hit it while we were pretty overbought on the RSI. So I said, likely get a pullback, but nothing. I wasn't expecting nothing major. We had support down here, nice support level around 77.54. And so, as I mentioned in there, that would be, my point was, if you're micromanaging a trade in Overstock or any of those other trading proxies, then you want to keep an eye on Bitcoin, because I said Bitcoin, come down to that 77.54 level, and that would be an objective long entry, and it got there, almost got there. Posted that follow-up chart, and then it did reverse from there. Here, let's pull the updated chart so you can see what's going on with Bitcoin. There it is. So that's there was that pullback. Like I said, likely to get at least a reaction off there. We pulled back, reversed even pretty comfortably above that 77.54. It tells me the buyers are stepping in pretty aggressively, and I like to see that. Now, I did say on there, I went on to say we need to take out this previous reaction high. That was from, I think, earlier this morning or overnight session. So once we take that out, it should open the door, quote unquote, should open the door to the next thrust higher. And I really like the yearly chart. If I go here to the yearly chart of Bitcoin, I should say daily chart. I went to 18 months, so we're looking at 1.5 years of price history with daily candlesticks. I can probably even add, look, I can add a trend line. Look at that right there, perfect, coming off the lows. So I see a lot of things on this chart that I like. Personally, let's just say I'm ambivalent to, the merits of Bitcoin, whether it's going to be around in the long run or not, but I could care less. I don't have to like a stock or a company to trade it. If it has a constructive chart, I'm in it. As long as it has a ticker, and I can, with a few clicks of my mouse, I can buy or sell it at my broker, I'll trade it. And as you guys know, I've traded Bitcoin for years, and via futures or the ETFs, GBTC, and there it is. You had intersecting downtrend lines. We had a breakout. We're zooming a little tighter, but before I zoom in, you can see nice divergence right there, positive divergence. You bounced off that uptrend line right there, and we've also regained 78.54. 78.54 was a pretty important support level that was broken. You can see right here. You had a gap, a couple big candles there. So a lot of reactions there. A little brief dip below, and we recovered it there. Finally gave up the ghost right here for good, and that level has since, so as I always say, support once broken then becomes resistance. So boom, fail, fail, fail. Now we're clearing it. The day is not over. You want to see a solid close above there, especially a follow-up candle tomorrow. And to me, that is certainly a bullish technical event if we get it. I think it'll happen. There are no guarantees, but based on the chart, again, it's a constructive chart. As a trader, when I see a stock coming up to resistance, I have one of two things I can do. I can either look to go long on a breakout if I think that's the most likely scenario, or short a rally into resistance if I think it's going to pull back. And based on the charts here, I'm more apt to position long for a breakout, which I'm already long, like I said, but that'll help strengthen the case. And then you can see my two targets are up here on Bitcoin futures, and I showed you that as well on GBTC, I'm sorry. And there's a downtrend line that may quite likely come into play there on the daily chart, and we still have an official trade on here. We went long somewhere back here on a break above 863. So on the official trade that's still active right now, we went long right here. We had our first target. That was an opportunity to book profits or tighten stops, and then put in another divergent low here recently, and stayed above the stop on that trade. So if you're holding out for these additional targets, trade's still active. And then we broke out above this downtrend line. That was the catalyst for this next leg up. We gapped up impulsive. That was bull flagging action, even though you don't see candlesticks there. That's what the futures were moving up, and we broke out impulsively today. So I think we come up, hit this trend line, probably get a reaction on there, and then continue on up to that next target there, about 1046, and eventually up here at about 1183 or so. And some of my, what I call, GBTC is what I call a direct proxy for the trade, because GBTC is, it tracks Bitcoin price. It's essentially, it's not a technically an ETF. I don't believe they categorize it in that thing, but it works the same way. It can only difference is it'll trade at a premium or a discount to the price of Bitcoin, but that's what it's tracking. Where these are companies, and these are not, they're not holding a basket of Bitcoin. That's not what they're doing, but they are involved in blockchain technologies, cryptocurrencies to some degree or another. And I could tell you, traded them long enough to know that they tend to trend along with. And in fact, just a couple weeks ago, right around or before the holidays, somebody asked, "Hey Randy, I'm in Riot and Overstock, and they're really not going anywhere. But what do you think?" And I said, "You got to sometimes give them a little chance, because they're not going to move until Bitcoin moves. And ultimately, if Bitcoin starts to rally, they will follow, especially when the charts are constructive as they are here. And so with Bitcoin moving, they're playing a game of catch up. And I can just say this: it's kind of like trading. You can either trade gold when you're bullish on gold, or you can trade GDX and the gold mining stocks. And I like to do the latter. I do both. If I trade gold, I'll use futures, but I also like the miners a lot. And I always say this: the gold mining stocks are simply a leveraged play on gold. When gold goes up 20%, a lot of the miners will go up 40, 50% or more. It cuts both ways. Same thing to the downside. They outperform to the downside when gold's in a bearish trend. So you can get more bang for your buck. And the same thing here on these quasi Bitcoin trades. These are indirect plays, but they will tend to move more so just due to their charts, due to a lot of things. You can trust me, I've traded these many times, and you can do the same thing if you want to just go and measure the gains. And if we look at Riot here, just for example, from January, about the end of December 2019, that was a 381% rally. Turned around, it fell 82%, and now it's rallying quite a bit more. Yesterday it was up 10%, today it's up another 10%, which is outperforming Bitcoin. So that cuts both ways, guys. If Bitcoin turns around and goes the other direction, and the bullish development's going to fizzle out, this one can fall a lot faster than Bitcoin. And I made mention of that in some of the comments today. But so far, so good. On a scale of 1 to 10, got to give it a 10 for a breakout. Why? Well, you had a breakout above the downtrend line, falling wedge pattern. A subsequent breakout today above the key 130 level. That was resistance. And we're following up impulsively. By impulsive, look at these volume bars down here. See how they're above average? They're above these other bars. Biggest volume we've had since back in October. So while no breakout is guaranteed to fail, you want to see ideally a breakout on a stock, especially long side trades. You want to see breakouts that occur on above average volume, at least 1.5 times or better the average volume, and that's what we've seen so far. Anything is possible. There's a little bit of resistance coming in here, about $1.50. I'll probably add a line right there for you, where we might get a hiccup. And again, it all depends on what Bitcoin's doing at the time. But when this sucker wants to run, it can run. Don't underestimate how much it can move. Just because it's gone up 20% in 2 days, go back in time. Get to know your stocks. I always say that if you're trading a stock, get to know what is it like when it rallies or falls. What are the moves like? And this little sucker can do this day after day for weeks on end if it wants to. And some days it can go up 20-30%. So just wanted to make mention of that. Don't see dollar signs and put all your money into this. It's very aggressive, low priced, what I call Vegas money. And as I also said in the comment section below, I like to spread things out. I like to spread my bets. So I go long all the ones that I've mentioned lately, and continue to add to them strategically, or tactically I should say. What does that mean? Well, you don't want to add to overstock today when it hit a high of 883 versus that revised target zone. I added a second level here at 897. So we effectively hit that resistance and we pulled back. It's had a nice run. It's taken a little breather. But so far, nice volume on the breakout above 716, real big volume. And so strategically to me, and that was also answered in that comment that I just showed you earlier, to the subscriber. Pull back to 716. If Bitcoin continues to run, I don't think you're going to get that, and I really don't want to see that now either. But it would be objective as long as Bitcoin still looks constructive. Even if Bitcoin pulls back a little more, that would be an objective long entry with a stop somewhat below 716. You can also add an uptrend line right here that's going to come into play if that is the case. Here, I'll draw it like that for you. And you can see the uptrend line off the recent lows. So you'd have intersecting support. And while there are no guarantees, what I can guarantee you is, well, that just contradicted myself. There are no guarantees in trading, but I can say with a high degree of confidence that although that's not a guaranteed successful entry there, if you take it, it is objective. You're buying a pullback to dual support levels, uptrend line plus a key price support level, which was further validated. I had it ahead of time, but the fact that we didn't just kind of meander on through 716. When they took it out, the buyer stepped in with conviction. So that makes that a very valid level to watch now. Therefore, on pullback, like I said, it's objective to go long. I'd step in a little bit above there if we happen to get there with a stop somewhat below. Of course, again, that depends how Bitcoin looks at the time. And then other than that, since if Bitcoin continues to run, it probably won't pull back that far. Your next objective entry would be a break above 920 or so, above that resistance zone, especially, and ideally, you don't always get this, but especially if you can consolidate below there first to build up the energy, work off the overbought conditions. But I know overstock, I've traded in the past. Overbought can become much more overbought. Again, if you look at this breakout right here, which I believe was highlighted back at the time, I'm going to measure from the point we broke out. You can see this thing hardly took a breather until it was up 168%, and that just took a couple months to get there. So like I said, there's the potential that we could only just be getting started here on this breakout, and this stock may not even take a breather until it hits that 11 or 12-ish, or maybe even that 1490-ish target. So we'll see. Again, don't fall in love with it because it can go the other way, and this stock tends to fall very fast when the traders exit it. So, all right, that's that. And the other one I mentioned was MoneyGram, passed along by a member. This one's pending a breakout here, so we don't have a buy signal yet. We're still below trend right there. There's a trend line. Look for an impulsive break above here. First target / resistance level 253. Break above there should open the door to 322 and then 391. And whether I add it as official trade or not, I like the trade, or I wouldn't share it. Everything that I post on it's just a matter of me getting the time to mark up, identify these targets. For example, my first resistance, let's say this one, 322 is resistance, so I would set my target on that one. If it's an official trade, I'd come in slightly below, maybe 316, just in case the sellers step in early. That would be the first target there. You have a gap right there to contend with, so I'll study the chart a little further, but I think that's probably the final target if Bitcoin starts to run, and as long as the trend still looks good. I think this one has the possibility to see that 391 level, and again, big gain potential in these guys, but you just have to keep your position size relatively small. And again, I like to use a shotgun approach instead of trying to pick one, my favorite out of the sector, and hope that that's the one that's going to take off. Spread it around a little bit in MGI, a little bit in Overstock, a little bit in Bitcoin, GBTC, a little bit in Riot, and as a whole, if Bitcoin rallies, those four should move together, and one day one's going to be up and the other's going to be down, just like today. Riot's up 10%, as I just showed you, and now over 10%. And Overstock, which was up earlier today, has pretty much ran into resistance, pulled back, and it's it's a little almost effectively flat. Less than a 1% drop on a stock like this. This guy can move 5-10% in a day. Okay, I'm at the 32-minute mark, and my goal was to keep it under 30. But you know what? I really wanted to cover this because I shared it in the trading room, and I wanted to get it out to you guys. Natural gas may be perking up here. It's kind of had a failure to launch lately. I've been pointing out divergences for a while. We've had some rallies, but it's the chart is constructive right now. I'm going to say that, and I posted it earlier today in the trading room, mentioning we still have this divergence that's continued to build. So that's positive divergence. Your indicator's making higher lows versus the prices making lower lows. You had a downtrend line right here, which was broken. It's been being back tested, which really formed this price channel right there. And we've broken out of the price channel, but as I said today, you have resistance around 2.168, and we need to take that out. So that's looks like there's a good shot that it will. So UGAS is the 3-time leveraged natural gas ETN. I don't see, if it breaks out, you get a impulsive breakout. I don't see a lot stopping it till it gets up here at about, that runs from target zones at 263 to 280 is the first target zone right there. It's a resistance zone, and if it takes that level out, then maybe 2.386. So that is NG futures right here, and again, UGAS is one other option. You can use the micro futures contract. I think it's QG, if I'm not mistaken. It's a smaller futures contract with a lower leverage factor. I'm going to wrap it up here. I was going to cover crude oil, coffee, but I put a post up on coffee today. Let's just wrap it up now, and any other charts that stand out, I'll get them out to you guys. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.